good day. Welcome to another episode of Analyst Hangout here at iBrandTV, where we talk about the stock markets and the economy in general. My name is Olayemi Akwande, and I have with me in the studio Ambrose Omodion. Ambrose is the MD. Are you CEO now, Ambrose?
Anyone.
Ambrose is the MD Invest Data Limited, and of course I have Olaoluwa Boboye from Cardinal Stone Partners Limited. Olaoluwa is fixed income analyst and macro, right?
Yeah.
Long.
Yes. Good one.
Macro fixed income analyst. Thank you for coming on board.
Welcome.
And of course, during the course of the show, I'm going to be having two more people. Once they come on board, I'll introduce them. But let us first start with the activities of the market for this week. What happened on the floor of the Nigerian Stock Exchange this week, Monday to Friday? Ambrose, can you do justice to that? Please?
Yeah, I would say the week was a missed one, but good that it closed positive for investor. At the initial time of the week or at the beginning, there was little panic waiting for MPC meeting, and that's come. When it came out, there was a kind of about 150 points in terms of increase in the PR and MPR. That was a shake that the market lost about 1.82. The next day, saw market also trying to rebound. But today, we have seen that for straight 3 days now, market has charted another cost for itself, looking up, which is good for the market. That means market is now ignoring the 13% PR MPR for now. But I believe that investors should not be carried away with this kind of gyration. Set your stop loss to know exactly when to take profit and when to enter. Let your investment go and trade your plan. Don't be carried away with the market. But also, if you look at the market, I will tell you just out of 6 stocks that control about 70% of the market is the one pushing the market up. I think market is also looking ahead to see the numbers that are coming for Q2 to really reposition their portfolio. But I said last time that this is the time to look at commodity-backed stocks or assets to look at, because once this commodity group to push their either cost or cost of to consumers and they continue to post their positive earnings, at the end of the day, they are likely also to post a good dividend, which also will feed on the price. The market is still very healthy. As market is trading above the T line, and also I'll tell you it's a good one.
One of these days, you're going to tell us what this T line is. The thing I noticed about the stock market is there's little that can actually happen that will make the market go continuously down. Maybe news coming into the market that will make the market go continuously down for 2-3 days, 1 week. Since the last time that we had this Sanusi tsunami,
2009.
Yeah. So it goes down 2-3 days, we go back to the normal levels again. Anyway, thank you for that, Ambrose. So I have on Zoom Alhaji Kaofigaba from APT Securities and Funds Limited. Good evening, Alhaji. Hello? Hello, Alhaji, can you hear me? Okay. He's joining us soon. So that's that about the market. But of course, the almighty MPR that we've been expecting, monetary policy rates here and there, everybody's saying, all of you guys failed. I'm actually waiting for Alhaji to come on board. All of you failed the exam.
Yes, I'm online.
Oh,
I'm on board.
Alhaji, fantastic. I was actually talking, saying things behind you. Welcome on board.
Yeah, welcome.
Yeah, thanks for joining us on the show. So I said that last week when we talked about our expectation for the monetary policy rate, all of you guys actually failed because you agreed, you, Ambrose, and our third guest agreed that the rates will be held fixed. It won't be changed. But then we were all surprised, and I'm sure a lot of analysts are actually surprised that CBN will actually increase the rate. So I'm scoring all of you guys 0 over 10.
We are not surprised. We are not surprised when they decided to do the reverse. I think it's just a copycat. UK have increased their MPR. USA have increased their MPR. I think that is why they follow the suit. A system where for almost 2 years, without reviewing the MPR, so to assume that things remain unchanged is the most likely happening. But he chose the other way, which we are really surprised. Because I can tell you, for the last 4 years, there was never a time that MPR moved by 2,000 basis points. Now it will move by 1,500 basis points, unlike the 500 basis points which he normally does. So it's really a surprise every analyst, but it's better late than never.
All right. Thank you, Elijah, for the intro. But I just want to read something. Of course, don't worry, Ambrose. I know you have a lot to say regarding it. But I just want to read something here that one of the reasons given for the change or the increase, as it were, Now, according to the committee, high inflation has been due to an increase in money in circulation, more of which is anticipated with the volume of pre-election spending expected as the country heads for the polls. So I see a blue ocean, that's the whole economy as it were. Then, of course, the politicians will spend, is expected. And so CBN thought or decided that the spending that is attributed to politics is enough to drive inflation. And based on that, they increased the rate. So when this rate was increased, Elijah, what first came to your mind?
Look, let me tell you, they are just trying to cover up. This rate has been stagnated when the inflation was 11%.
Okay.
Today we are talking of almost 17%. So what were they doing? 11 to 12 to 13 to 14 to 15 to 16, now getting to 17. It's now they are using that as an excuse. So the inflation increased by 50%. When they decided to increase by their just 1,500 basis points, that is 1.5%. Not up to even 20% of what they exist. For me, they must have a reason for doing things, but it's not good enough.
Thank you.
Because for almost 2 years, this MPR was not changed while inflation was going up. Go and check the record. For the last 8 months, the inflation was going up. So why they didn't change it until now? They must have a reason. Thank you.
Thank you. Thank you, Elijah. Okay. So I've got Boboye, fixed income analyst. So when this happened, when you saw this rate, first off, were you expecting it to change?
Okay, so at the start of the year, in our firm, in Cardinal Stone, we had projected that we might see a maximum of 100 basis point cuts, either at the mid-meeting of the year or in the second half of the year. So the cuts was not entirely, the hike rather, was not entirely surprising,
okay.
But the aggressiveness, the 150 basis point hike was what came at a surprise to us, right? And just to put a bit of perspective to this, the hike in rates that the CBN did, communicated few things. Number one, to curb elevated inflation. And inflation is in two sides in Nigeria. We have the demand-sided inflation and we have the supply-sided driven inflation, right? The CBN stated out clearly that the inflation in Nigeria is not entirely demand-sided. And monetary policy rates or monetary policy adjustments anywhere in the world can only curb demand-sided pressures, right? In which the CBN is trying to do, looking at the excess liquidity in the market in terms of money supply. When you look at money supply today, it's about 16% up year on year. Also, electionary spending is coming. There will be a lot of money out there, which we think that the monetary policy rates can do a bit of justice to curb, right? From the demand, from the supply side things, of things, we don't think that the monetary policy rate is significant enough to curb that. There are still structural issues, insecurity issues, which continue to pressure food prices and some other things. And then the second is, beyond the rate cuts trying to curb inflation, it's a signaling effect. The CBN stated it clearly, right, that if the CBN chooses to stand pat on interest rates, it will make the CBN look as if it's not sensitive to the global issue, which is inflation. So it was more of a signaling effect to the money, to the foreign investors, not the domestic investors, foreign investors, that the CBN is still on its toe in terms of curbing inflation, in terms of tackling inflation, and also while still having the mind of the entire economy, still having the economy in mind. So those were the things, the thoughts that flew through our mind when we saw the hike.
Thank you, Humbers. Waited. All right. What's your take?
Yeah, actually, I said it's in two perspectives. I explained the other side for the increment. Yes, like Elijah just said, globally we are seeing all the central banks in the world trying to fight inflation, trying to checkmate inflation with hacking rates. But also look at every climate has different environment. Not because the US did hike, then either England or the same thing. But look back to your economy. Yes, we say we are recovering. What is the state of recovery? Are we having strong recovery or a fragile one or a weak recovery? Because actually before now we know that it's cost push that we're having, not because of liquidity. I'll say it anywhere.
Yeah.
But now if you're increasing the cost of fund, automatically you're trying to kind of deflate the recovery we're seeing. Yes, if you look at our GDP for Q1 that just came, look at the Q1 2021. Yes, 0.14. Now we're having 13 point, 1 point, yeah, 1. But look at the previous one, 2021 fourth quarter, some of 3.98. That is a decline for first quarter. That is kind of contraction. For me, that is not enough. But you look at, yes, if you really want to make the manufacturing sector to really enjoy the rate. But one thing that they just said during the communication is that they want to still leave all those critical sectors that they intervene with one digit interest rate, which is good. But I'm telling you that if you are hacking rate to attract foreign investor, at this time that it's pre-election year, no foreign investor will come to Nigeria now until after election. That means if you are sacrificing your economy to attract foreign investors to your economy, why economy is recovering? For me, you need to balance that, because a hike in interest, one, is to encourage savings. But how many people in Nigeria have that money to save? But why, if you save, you invest. I agree that. But let's look at what is really happening in the economy, reality now. So for me, stable development, because they want to one, checkmate inflation, and at the same time attract foreign investors. These are the major reasons why it was increased. Whether they're saying that money back policy is coming, fine, we agree. But one thing is that pre-election year, no serious foreign investor come and play in your economy until after election. Then the next 4 years, the stability, they will come. I was thinking that there will be adjustment in interest, but not in this meeting. Like second half of the after the primaries that was just expected to happen at the end of this month. But for me, they decided to go this way. It's not totally a bad decision. But let's also change our investment strategy. That's what everybody that called me. Change your investment strategy to suit in this environment. So at the end of the day, we'll also be smiling to the bank.
You know why I'm smiling? You know, Ambrose has never, ever said any decision is bad. Ever. He will say it's a welcome development. So I'm sure that when I first saw this news, and what actually came to my mind beyond foreign investors, they don't stay here. I look at it from a point of common you and I as a citizen. Right. Now, you're given loans single digits, not to every sector, obviously.
Yeah.
Now, for those sectors that are not given, there's increase in costs of production, which they will pass on fully or partially
to the consumer. Yeah.
Now, we're already complaining that things are expensive. I mean, on the average, standard of living has fallen, cost of living has gone up. So this will also increase prices. So are we not creating another type of inflation that is cost or price driven, while we're trying to curb one that is politically driven, according to CBN? Alaji, you still there?
Yes, I'm there.
Okay, so I'm asking that should we be concerned when it comes to the impact of this increase in rate on consumer goods, for instance, and the cost being passed on to the final consumers?
Yes, we must be concerned, because we have term of unemployment. By the time the cost of borrowing will go up, definitely sure will go up, and therefore reduce borrowing by the manufacturing sector. And
hello, Laji.
Network.
Oh, okay. He's going to join us soon. Now, Olaolu is so relaxed. I don't know what is going on in the fixed income market. Maybe they're in the cocoon, it's not affecting them. So, Ambrose explained the other time that it might actually discourage foreign investors from bringing money maybe to the stock market. Do you think it's going to discourage foreign investors from bringing money into the fixed income market?
Not only the stock market, I mean. Not this
Alaji is back. Alaji.
Yes.
All right.
Yes.
Talk on.
What I'm saying, it has a side effect to our manufacturing side,
Okay.
because the cost of borrowing will rise up, and therefore they reduce expansion and productivities, and therefore it will affect our unemployment. At the same time, now, every money that you have borrowed before in the single digit, banks, they have a provision that as the MPR goes up, they will rise up and write you a letter that they have increased your loan. So the single digit will now become a double digit additional cost to manufacturers, and therefore it will stagnate the economy. We don't like it, but they choose to go by this way. And the truth of the matter that you will see a reduction in borrowing by most of the industries, and therefore it will affect unemployment.
Thank you very much, Alaji. Thank you. So I actually wanted Boboy to speak to you because obviously with this increase in rate, we're expecting increase in treasury bills returns, right?
Yeah.
Okay, so
In bond.
in bond
Yeah.
also.
Yeah.
So do you think that is going to encourage foreign investors or even local institutional investors to bring in more money into the fixed income space?
Okay, so before I speak to that, I would like to take it from where Abu stopped, right?
Okay.
Trying to look at the narrative of the economy, the fragility of the economy and the economy not being strong enough. Yeah, I agree with Alaji, I agree with Ambrose that we might see borrowing costs going up for manufacturers, and then the question is, do they have the arsenal to take up these elevated costs, or they will pass it on to consumers, tight consumer wallet and all the likes of that. I totally agree with that. But like Ambrose said, the CBN is still keeping manufacturing rates, at 5% levels. That's a single digits. That's positive for the market in terms for the sector. Also, intervention in the agri space continues to increase. Just showing that the CBN still have the real economy in mind. And MPC hike will not, I think that we've moved beyond the fragility that we saw last year, or maybe perhaps at the start of the year. Ambrose is comparing quarter-on-quarter growth. I don't like to tell that narrative because we have seasonal sector within the Nigerian economy. Agric, cement, cumulatively, these two sectors account for almost 30% of the entire economy. Agric is about 25, cement about 5, 30%. So these seasonal factors will mean that economy will most likely contract when you compare it quarter on quarter, right, between Q4 and Q1. So it's better when you look at it on Q1 historically. We are back to 2016, 2017 levels. We are even higher than that. We're back to 2015 levels, which means that we've been able to surpass the 2 recession levels that we are, and we're back here. Now, coming down to your question in terms of the impact on the fixed income markets, yes, rates are already going up. The auction that was held on Wednesday, we saw yields jumping, stop rates jumping by almost 200 basis points, at the long end of the curve.
1.5.
So how much is TB rate now? Let's take 90 days, for instance.
So
for 360 days, about 6.49.
6.49, right? Secondary market auction, I think it was close to 7%, about 6.9.
That's still way below inflation.
Yes.
Why do even people bring money to fixed income, really?
So there are regulatory factors.
Okay.
So pension fund administrators, PFA, they must allocate X% amount of their total fund to the fixed income market, right? Because whether you like it or not, it's still risk-free. And then when you still look at the fact that the borrowing cost in Nigeria, as much as we agree that it's a bit elevated, is still not too elevated, right? It's still not too elevated.
Which planet are you coming from?
If you do
double digits. Wait, seriously, we are better than which country when it comes to borrowing rate?
So some countries are paying more, but we don't need to compare ourselves to other countries paying more. We should look at our peculiarities.
Our environment.
Our environment. So for the fixed income market, rates are going up. Our investors are still waiting to see when the market will bottom so that they can rightly position, like Ambrose said, but rates are going up. But I don't think it will take a very huge toll on the manufacturing sector. Alaji is too skeptical. Maybe he has a bit of exposure in the manufacturing sector.
Maybe you have a particular shock absorber that we are not privy to.
Actually, just to add to what he just said now, he said the PFAs, it's clear that they have a kind of regulated portion of their funds should be either in fixed income, exposure in equity market, and other stuff. But I believe that if you check one of the best or the 3 best PFA today in the market, these are what are playing even more on equity market because they understand the terrain. But I believe that even with the adjustment to 13%, which you know that naturally funds to start leaving equity market to the fixed income because of the risk-free environment. Yeah, but I believe that those that understand that are design investor, I call them that here the opportunity to make money in the market. Why did I say so? There are some stocks or some equities that that yes, they have kind of inelastic demand for their products. That even there's adjustment in their price, there's still demand for their product. That means they will still earn good money, and also price will still go because when we are seeing good earnings and we are paying good dividend, market will react to that positive number. Those are the areas people are looking at. That's why I said earlier in this program that let's target those companies that have what called commodity backward, stocks that at the end of the day you can position. But for those that don't want to take risk, fixed income is becoming attractive. I won't say that. So
fixed income is looking risky.
Wait, let me finish now. At the same time, if you are looking at the inflation and fixed income, I'm telling you that they are still in real red negative position. Yeah. Because if you look at the inflation, that by end of May, inflation is either hitting 17.8 or 18.
And you're having investment at 6%,
invested
7%?
even 12%, you are still already in
In
negative.
red.
What I believe that investors will do, look at those assets that will go with inflation, even give you above the return what's having inflation. And in Nigeria, I see inflation is 18%. It's more than 18%. That means you need to earn more than even 20% to say you are really making
Above
money.
par, yeah.
Right.
I even want to speak to the foreign investors that are bringing dollar rather, into the economy. I believe that the rate at which dollar is so volatile is even worse than inflation rate.
That's why, like what you just said, I wanted to even chop that one. Let me tell you, the way it is now, our FS market is not well regulated. It will attract foreign investors to come, because even when we are coming to God, it's a problem. And at the same time, I said earlier that being pre-election year, they won't come easily. And if you look at a report that was released yesterday for the month of April on foreign investors, that they are not much in our market again. That's why we're seeing little stability for the past 2 to 3 years in our market. As we speak now, they are about just 13.2% in terms of, less than that. That means the market is being dominated by an institutional investor and the retail investor, which is good for the market. That means we understand the terrain. That is why I said that the SEC and NSC operator like Alaji, like my brother here, that they should go out and educate Nigeria. Let's have more participants in the market. Even the fixed income market will also be beneficial, because when you understand how to trade, to balance your portfolio, you have equity, you have fixed income where you can reduce your risk. If you have a good robust portfolio, for me, it's about education. Let's depend less on foreign investor.
So the foreign investor story here, right? There's a story to that.
Okay, please tell us.
At the moment, foreign investors are exiting emerging markets and frontier markets everywhere in the world. They are running to safe havens. They're running back to the US. So when you hike your rate, it's not necessary to bring them back. So we have funds that are trapped in Nigeria.
I like that word, trap.
Yes, because they can't leave because of lack of dollar supply. When you increase your MPR, it increases the carry trade opportunities. Carry trade opportunity looks at interest rate differential between developed markets and Nigeria, and also look at exchange rates, spot rates, and expected rates in the future. That has improved carry trade slightly, which provides a bit of comfort for funds that are trapped into the economy. They can't leave, but they can roll over at higher rates. For new investors that could come in, they are not going to come in like Ambrose said, because this is pre-election, which is peculiar to our country, and some other countries like Angola, they have theirs in August. Also, the general global risks of settlement, they won't come. But then they begin to watch and observe what's going on. So when you look at Nigeria's carry trade now, with this hike, it could push it close to about 8%. When you compare that to Egypt of about 12%, Ghana used to be around 10%, but because of these fiscal challenges in the country, is out of the space. So investors continue to observe that, okay, once the market bottoms, then they can look at, okay, it's time to come back into the economy, right? So it's signal, it's communicative rather than to spur, an immediate action at the moment. And for the fixed income guys, right, if you do placements with banks, for instance, tier 2 banks, you might be getting close to 8% levels. Risk-free, your money is just sitting there and you're making 8%. So
I'll buy Okomo. I'll buy and I'll make 17% in 1 week. Anyway.
Okomo has rallied. Don't
let us go there.
I buy MTN.
Like seriously, I'll buy MTN. I'll buy Airtel. I'll buy Steplat. Like I can give you like.
Airtel has given us over 9% again. 2 days.
Ambrose, let's not feel like we want to eat him up. All right, but I'll buy a lot of things and I'll make 17% in 1 week. You can see us after the service.
But members,
yes, sir.
let us be aware
all right,
that the depths of our market cannot take the quantum of the money available for investment.
Okay.
And therefore, you need to look at for the money market and the bond market, which can take a lot of our debts. Trillions of naira can be played in the bond market and money market, but that cannot play in the equity market. And because of this, we have no choice.
Alaji, I can barely hear you.
The network.
Network is terrible. Alaji, sir, network is not a friend right now, but we need to go on break, and when we come back, you can finish your thoughts on that, and then we can review some Q1 results, that's Q1 result of some companies in the food and beverage space. We'll be right back after the break. Stay with us.
Dry Cleaners Limited. Dry Cleaners Limited. Yeah. wash and quick delivery, yeah. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. For clean wash and quick delivery.
Swift Dry Cleaners. Clean wash, quick delivery.
Oh boy, winning you was so easy.
I just couldn't stand those your powerful shots. That's what happened.
Really? Let's go to my place for dinner.
This fufu is so nice.
It's through unripe plantain flour.
True unripe plantain flour is delicious.
Yes, true unripe plantain flour is what I serve my husband for swallows. It's easy to prepare, fortified with vitamin A, low in sugar and cholesterol, rich in fiber that helps the heart, builds and strengthens the bone, and his energy level is boosted.
Through unripe plantain flour, no additives, 100% natural, a product of Pali Agro Products Nigeria. Through unripe plantain flour, available in all leading stores nationwide.
True unripe plantain flour is 100% natural flour gotten from the processing of unripe plantain. It contains no addictive and has a net content of 500 grams. True unripe plantain flour contains vitamin A, B6 and C. It is gluten-free and rich in calcium. Consuming through unripe plantain flour helps to build and strengthen stronger bones and can be a great meal for diabetic patients. It decreases your chances of constipation as it has a high fiber content and provides you with a low-fat diet. Here are some steps to prepare your through unripe plantain flour. Firstly, mix through unripe plantain flour with hot water in a pot and gradually add water till you achieve desired thickness. Place over medium heat and turn very well for 4 to 5 minutes to get the right texture. Mold into a ball and place in a bowl and allow to cool. Serve with your choice of soup. Through unripe plantain flour can be eaten with any variety of soup, be it your ofe oha, ofe onugbu, begiri, ewedu, or your miyan kuka. To get your through unripe plantain flour, contact us at 12 Olowera Isheri Road by First Welder bus stop off Omole Phase 2, Olowera, Lagos, Nigeria, or call 070-6663-8213 or 081-6397-4447. Distributors are needed nationwide.
Mama, you're coming to Lagos. Banga. Baby, Mama just called me now. She's coming to see you. She asked me to tell you to make banga soup for her. And she's close to the house. Oh.
How do you expect me to prepare banga in just few minutes?
I have a solution for you.
Really?
Mm-hmm.
If you sabi cook the banga, you're not going to enter my family.
Pali banga is used in making other exotic dishes such as banga jollof rice, banga efo riro, banga asaro or yam porridge, banga egusi, and many more. Pali banga is easy to open, no preservatives, no cholesterol, and no coloring. Approved by NAFDAC. Manufactured by Pali Agro Products Limited. Available in all leading stores and supermarkets nationwide.
Pali banga, natural palm fruit extracts for tasty African cuisine.
The photography business is a very competitive industry. Every year, thousands of talented photo lovers consider turning their passion into a money-making business venture. Especially in a fiercely competitive marketplace like Nigeria, in which it is very easy for anyone to buy a digital camera and call themselves a professional photographer. According to some practitioners, a new photographer who wants a standard studio can start with a budget of 3.5 million naira. However, one can start with a lower budget of about 500,000 to 1 million naira depending on the tools and cost of rent. On the average, the cost of photography equipment is around 294,790 naira. However, the price ranges from around 41,000 naira to as high as 2.46 million naira. Nigeria has a population of over 200 million people with a vibrant movie industry that produces 50 movies per week, generating annual revenue of approximately $590 million from between 2016 and 2021, helping the photography industry as a whole, according to a recent research by the UN.
All right, welcome back. It's still Analyst Hangout here at iBrandTV. And before we went on break, we spoke about the almighty NPR and the impact on the economy, the stock market, and the fixed income. So on this segment, we want to discuss some Q1 results, Q1 result 2022 that came out in the food and beverage space. And I still have Ambrose in the studio. I've got the man from Pluto, Olaolu.
Nigerian.
Yeah. And then on Zoom, I still have Alaji Gawa from APT. And I have Rotimi Olubi joining us. Rotimi is the Managing Director, ARM Security. Hello, Rotimi. How are you doing? Rotimi?
Yeah.
Rotimi,
yeah.
Can you hear me? Good evening. You made it.
Yeah,
all right. Thanks for coming on board. Good. Yeah, I can hear you. Thanks for coming on board. Alaji, you're still there, right?
Yes, I'm there.
Fantastic. So we got some results during the week from the food and beverage space, and let's begin with Unilever Q1 2022. Unilever grew revenue from 16.51 billion to 20.56 billion. That's 24.54% increase, and they grew their profit after tax from a negative position of 492 million to 1.8 billion. That is huge. And the question is, what happened here? What did they do differently? They grew it. So, Alaji, do you want to start off?
Yes.
Okay.
I think Unilever have seen the writing bold enough.
Okay.
Because they are the group of PZ and Cadbury. And if you look at the improvement in the PZ and Cadbury, far ahead of that of Unilever.
Yeah.
So Unilever have no choice than to follow the bandwagon effect, which they did, but the market is still watching. They are expecting more. If you look at the increase in the Cadbury and the increase in the PZ, honestly, you would say that of the Unilever is just a mere child play. But we hope the second quarter will be better than what they have displayed in the first quarter.
Yes.
All right.
And because of that, you can see the price has stabilized and still hovering between 14 to 15. But we expect more returns from Unilever.
Okay. Thank you, Alaji. Rotimi, hello.
Yeah, good evening once again.
Good evening. I'm curious to begin with what ran them to red in the first place.
Unilever, Cadbury, and all that.
Okay.
We noticed that in recent times there was improvement in their price performance. They've actually not enjoyed a market rally since COVID. So their prices have hovered around a particular interval because of their profitability level, and I think COVID significantly impacted their numbers.
Okay.
So we are beginning to see improvement in their numbers. This is as a result of passing on costs to consumers. If you look at, because of the current inflationary environment that we're in, cost of produce and products have increased significantly. Some products are selling at maybe 50% higher than what they used to sell. So most of these companies listed in that sector have actually leveraged on price hikes to improve revenue, top line and bottom line. That's what we're seeing in these companies. So you can see improvement in their numbers. For companies like Unilever, maybe perhaps we've not seen a major spike in terms of their numbers, but I expect to see that going forward.
Okay. Thank you, Rotimi. All right. We are now in our space. Rotimi, are you still on?
Okay.
All right. Thank you, Rotimi. I'll come right back to you. Just hold on. We're in our space now, stock markets, stockbrokers. But let's just give him benefit. Do you have something to say to this?
Yes,
okay, so fine. I don't do equities, but I don't cover equities. Right?
Okay.
But one thing we'll be able to see from consumer goods player in the first half of the year was they were able to increase prices.
Good.
And they also were able to push out volumes. He has spoken to prices, so I don't need to, reiterate that.
Yeah.
But what we saw in the volume space is that we saw that a couple of consumer goods names took advantage of product innovation and they increased their product portfolio. This increased volumes and also brand visibility. Also, B2B activity has somewhat increased over the last few months, right? When you look at companies who are able to support B2B activities, companies like Trade Depot, B2C also, the cumulative impact of all these have given them enough legroom to push out volumes out there, which has been positive for the numbers that we're seeing the consumer goods, companies churning out. In fact, we even saw the impact on the GDP. When we saw the manufacturing space, the FMCG guys and the cement accounted for over the most significant, impact that we saw on the entire growth for the manufacturing space.
Thank you, Chop Knuckle. He's actually playing on two words, right? In two words, fixed income, and it's here in our market. So, Ambrose, what do you have to say?
Actually, you just said it that your product portfolio or your product lines matters a lot. When you are increasing your product line, at the same time you are entering a new market, that will also support your top line. If you look at the case of Unilever, they are moving from a negative position to a positive. That means during the COVID period, either there was constraint for them. Now that we are post-COVID, you can see many all the sectors, the players there are posted a good number. For me, it's a good one for them. But what we're supposed to look at as analysts or investors are want to look at what is the margin, the profit margin of this company. It's very important to know exactly where you expect to have it, because it is what you have made you can pay out at the end of the day. You want to see the company EPS and also their profit margin. Are they returning more of their sales as profit, or their it's an area that we're supposed to look at. Go back also and look at the operating cash flow of this company. Is it increasing? One thing is to have a positive number. Sustainability is key when it comes to that space. For me, it's a good one. Like I just said earlier, that if you want to know whether a company, economy is doing well, go back and look at the corporate results from companies, because most of these companies represent the sector, the economy. Once they are seeing positive number, it will give you a sign what the GDP should look like. That's why I said, when I saw the little, like he said, I'm looking at a quarter, and he's looking at a whole year, and also looking at also the cyclical movement and that come with a particular quarter. But I feel that increase in rate, already we are seeing rising inflation, and we are seeing a slowdown in terms of GDP Q1. Investors should know what to play now, because at this stage, I would say the economy is just at at the late expansion for me, because if your rate is up, inflation is not going on, your productivity in terms of GDP is slowing down. It's not too good for the economy. But the consumer sector, for me, is a no, because you know that we need more survive. We need food. For me, that's why even there's increase in price, people will still buy. Only that at times when we are buying, like for me, those that take Milo, for example. Now, if your family, you are two, before you used to buy like 6 kind of Milo for consumption. If the price goes to a level, I reduce to 2. I reduce to 2.
Yeah.
Some of them will remain on the shelf of the supermarket and other stuff. But that is why we need to also look at balance it. But let's see the acute number. Because the more inflation is coming up and people are seeing that price is becoming hitting the roof, it's also going to have a war of effect. That's why I said this rate increase, which is expected, but you look at the end of the day, when companies see that this is becoming difficult for them, the one thing they start laying off. That's why I believe that with time also we can see adjustment. Let's see how it goes. Let's leave for this before the next MPC meeting. Let's see what's play out. And let's see what's going to happen.
Looking at Nestle's results, okay, so we moved on. Let's go to the premium. Nestle is a premium stock in the market and also in the manufacturing space. Nestle actually grew the revenue by 26.32%. Now, for a premium product that you can easily substitute for maybe a cowbell or something, and they actually grew it, then you begin to wonder, looking at it and comparing the fact that earnings, or rather disposable income, is reduced and standard of living has gone down, but premium product is going up. I find it difficult to reconcile. What's going? You expect that maybe revenue should be flat, or go down?
Let me just put a word there so that you understand. When you are appealing to different sectors of the market, you have children you are appealing to youth.
Children that don't understand what inflation is.
Yes, you have children you are appealing to. You have adults. You have the elite. That means your market is. Whatever I said, stock like a Cadbury. The product portfolio is very thin.
Just born with it.
When I see the number they posted, I say, oh, is this sustainable? Not that by next quarter was, because a company that has just few product line once anything hits one of your product lines, it's going to affect your bottom line. But something like either Unilever or Nestle, they have multiple product lines that they can always penetrate two different. Like I said,
if you're not buying Milo, you buy Pampers.
What I said, like the make, they have the sachet one for those low class. They everything. Both at people, those one for at the top, the senators and the president, all of them are there. Even, and also they have water. You have different sources of making money for them. I remember, sorry, I'm thinking about. I remember when the Cabri did their rights issue, they was oversubscribed. They returned about 6 billion back to investors.
The money they could have used for investment.
I was in that meeting. I don't hide my. I say, I asked the question. Does it mean that your business developers
you don't have anything to
lost, are not you're not returning fund that's in your hand already to shareholders? If you are doing pure water, you are still to make money. You can see how. Go and look at Nestle result. What water is contributing to their bottom line. That is what for me. Because they have just little product line, just like he just said, very few product portfolio, very small. Anything that affects one will affect their life. Like I said, the number I'm seeing in Cabri, I'm very just trying to you have to be very careful.
All right, thank you, Ambrose.
No, but hold on.
Okay.
I think you need to understand that because of the valuation of Naira, it makes our neighbors to rush into Nigeria and buy Nigerian products because it makes it cheaper. If you bring CFA, you exchange it to Naira, you get plenty of Naira. So most of the neighbor country and even down to Central Africa, you see they are using Nigerian product because the valuation of Naira make our product cheaper, and that is why you see the turnover is increasing. It's not because Nigerians are buying more, but because our neighboring are finding it cheaper to come to Nigeria than to buy it abroad.
Okay.
That's a good point.
Thank you very much, sir.
I never thought of that. Because I was wondering, we don't have money. Oh, of course, he has money. That we don't
we have money.
Yeah, we have money, faith. But I'm saying the purchasing power.
Yeah, I agree.
Then these companies are posting fantastic results. Then you're trying to marry it in your brain, like what's going on.
No,
So what you said is actually valid.
There was a return in supply, and now we're seeing that those companies that are doing COVID, they are now coming out aggressively to do their marketing, to expand. That's why you are seeing it. Let's say I go for 2022. I believe that if it sustains in 2023, I'll tell you, like Alaji just said, we're going to make money this year and also next year by God's grace.
All right, thank you very much, Ambrose. All right, let's look at NASCON, the salt people, and Dangote sugar people. These two products, it's difficult for you to just increase consumption. You can't just begin to consume more salt, and you can't just begin to consume more sugar, obviously. So, but looking at NASCON results, revenue actually went up by 29.06%, but profit after tax came down by 46.57%, Q1 on Q1. So, what do you think is happening here? Are they expanding into other markets, which actually is reflecting on the revenue? I don't know what's going on in NASCON.
No, if you look at it, the top line is positive and bottom line is
like 50% negative.
Is down.
Yeah.
No, that means the two between the top and the bottom.
Something's wrong with the cost.
The cost space where you are, because what are you using to generate what you are, the top line is there. If the high cost there, and also if the terrain they are playing is not so friendly, don't forget that. I think they are going to tomatoes, all those things, but actually I don't have detail of their result, but I believe that for their bottom line to be in a form of decline, something has happened along the line. But for sugar, for me, sugar is a thing that it's not for consumption for only retail, only the consumer. It's purely for industrial use and other things. For me, I see that space is still very good to go, because if you look at what happened in Brazil, that their sugar farm is affected with something. Therefore, that will keep sugar price in the national market high. That will be farming welfare also impacting on Dangote sugar. But I believe that Dangote sugar, at the price it is and the number we're seeing, there is improvement for them. There is a room for improvement that will also reflect.
I have a feeling they're eating into other markets, because you see Dangote sugar now in packs, different sizes. You see it everywhere you
go. Also, it's a second item. When there is kind of a fasting period, it's still more consumption. Although the way it is, I say that it's a good thing, but let's wait and see their number.
All right, Alaji.
Alaji has something to say.
Yes, he does. Alaji.
Hello, sir.
Yes.
Okay.
My concern with the sugar is that the raw material is imported and exchange rate affect the raw material. That is why you see their bottom line is down by 46%. Because they cannot.
That's for salt.
That's NASCO. NASCO, sir, not for. That's for
even
NASCO.
The NASCO. Where do you get the raw material? You import it.
For NASCO, for sugar.
Both sugar and salt, you are importing the raw material. The sugar we are producing in Nigeria is not up to 20%. So 80% you are importing it. and you have to get exchange rate, and you know the exchange rate, you have to go to parallel market. Because if you don't use 600 naira, you don't get dollar. If you don't get dollar, you don't get raw material. So they cannot push the whole cost, and that is what is affecting them.
But you just mentioned dollar rates. Shouldn't that be part of the sector that federal government should give rates at official rate?
Do the federal government have enough?
Good point. True. You're right.
But I was thinking that Dangote Sugar have done a sort of backward integration in terms of sugar farms here and there in the northern region. Also, they bought over Savannah sugar, something like that in the north. Isn't that enough for them?
Look, let me tell you, Ambrose.
Okay.
Bua has done backward integration.
Okay.
Go to Basita in Kwara and Niger.
Okay.
You see what they have done. Pula Mill have done backward integration. Go to Niger and Nasarawa State and see a lot of sugar they are producing. All together is not enough.
Okay,
it's not enough to go to backward integration. You need a high yield, and you need the fertilizer that will make it to produce the high yield. And all these are not as much available as expected. So they are going back, but they are not getting enough.
Interesting. Thank you, Elijah. Thank you, Elijah. Okay. Do you have something to say to NASCON?
No, I think they you know.
They say, okay. All right, let's talk about Nigerian breweries. Okay, so when it comes to the real Nigerian breweries, Ambrose will not have anything to say regarding that. Or do you, which beer do you drink?
I don't drink anything. Let Alaji is there. Reflecting it online.
I say Alaji drinks me. So what's the brand of beer?
I chat for you.
Come on, like, what do you mean you don't drink? Anyway, Nigerian breweries, they actually, the company grew revenue by 30.37%. And profit after tax by 7.73%. So I was talking to a colleague of mine, and before we came on board, and he said that they have this brand of beer, Life. I don't drink beer too. Life, that they actually had this aggressive marketing, and they focused southeast area of Nigeria, which might actually account to increase in their revenue. And they also have a particular beer, Radler. So let me educate you. You know you don't drink, but just in case you want to change your mind, Radler. Of course, you know Radler.
I'm not ready to change my mind.
Okay, so they seem to focus on these two, and they focused on a particular class, like women and locality. So maybe this actually contributed to driving their revenue. But from an analyst point of view, what do you think accounted for this? Of course, I know that when we are sad, we drink. When we are happy, we drink.
You know, not that I don't invest in that sector, but I was listening to analysis before end of Q1, when Heineken in UK and US released their own results. Immediately I say, oh, this was something that happened, because they said also because of the COVID-19, there was some restriction. People are not going out. No, but now there is we have post COVID. People are now free to associate, and the consumption has also increased. That is what impacted their performance. For it's good, the numbers from that sector, even the one from International Brewery, Champion Brewery, Guinness.
So it's a sector thing.
Yeah, it's a good number for them.
Okay. Do you have anything to say as a macro?
Yeah, so it's largely a function of post-COVID activities, right? Companies reopening, economy reopening, more activities out there, more grading, coming together. It supported our numbers, and like your friend likely mentioned, the products targeting a particular region. There's some products where they are predominantly common in a particular region, where they are the dominant factor there. That has also helped to strengthen the positive numbers that we're seeing. And aside from that, general to the consumer goods guy, they were also able to increase prices. Conversing with some consumer goods analysts out there, we're able to get a sense that some of these guys were able to increase prices, do a bit of product innovation, which was positive for their numbers.
Okay. Thank you very much. Alaji?
Yes, in addition to that, they got their raw material from the local.
Okay.
They buy maize, they buy guinea corn in large quantity, and all this they source it locally. And therefore what they did a very good integration where they buy less of wheat, more of guinea corn and maize, and that makes their product cheaper, and they can push the cost to the consumer, and that's what makes the turnover increase and the profitability increase. Today, if you look at Guinness, it's almost double the price. Nigerian breweries is getting to that. But don't forget that all these stock, they are trading par less than 50% of their price in the high peak. In the 2008 and 2009, we are trading Guinness and Nigerian Brewery between 170 to 190 compared to the current price. So for the long-term investor who will invest more into this and hold it, it's just a matter of time. It will, most of them, they are likely going to recover and start trading 100 and above. Guinness have even hit 110. So I'm not surprised if I see Nigerian Brewery before the end of the year hit 100 naira and Guinness move better than that. And don't forget, Guinness, their year end is June, and therefore people are expecting by the end of June they may release an audited result, and that will push the price higher and better.
Okay, thank you, Alaji. So let's just have a brief summary. We've talked about Unilever, and I just wanted to speak to is it a good buy or not? So we've talked a lot about all this stuff.
Yes,
so,
for
long term. Okay.
For long term, it's good to buy all of them.
All
for
of
the
them.
medium term, it's good to buy them. But for the short term, I don't see much in the Guinness until they release their audited account and we see if they are likely going to do. Apart from the dividend, they may likely give bonus.
Okay.
Except they do that, the price is not likely going to change.
All right. And also in the food and beverage space, which one you recommend for short term, medium term, long term? We spoke about Nestle, Cadbury.
I recommend flour mill because flour mill their year end is March, and we have seen their 9 months result, and we are expecting that by the time they close their year end March, the result will be better. If they change their policy and pay a generous dividend, they can go to 45.50. Because in terms of the size, when you compare them with their boa food, you know what the size they are. So if they decided to be generous, the investor will really reward them.
Okay. Thank you very much, Elaji. So, Ambrose, what do you have to say? These stocks, long term, medium, short term?
For the medium time, I think I will advise you look the way of Unilever. Then for those that want to really play defensive, like the market is now, it's not the time to just enter any stock. You must have stock that you are using to defend your portfolio. For Nestle has been that stock that play that kind of role. Yeah, you can put it just to manage your portfolio. Then I also see opportunity in sugar. So that's one I can look at.
Okay, fixed income. Do you still advise? Of course, you will tell us to bring our monies, but 8%. Like, can't you do more? Like 10%? Can't I negotiate higher?
So the thing is, right, it's about balancing your portfolio. You have to do a mix of both, right?
Okay.
You have exposure to fixed income, to equities, to Eurobonds. We didn't even talk about Eurobonds at all. When you go to the Eurobond space, you could have, return in Ghana, doing some short end of the curve, doing some 20%. Yeah. When you mix that with your portfolio, you have dollar-denominated investment, it hedges against currency risks. You have exposure to equities where you could get massive return. You have exposure to fixed income, which could give you, protection against sudden change in the disposition of the equities market. So it's just about, balancing your portfolio and having across board.
Thank you so much. All right, thank you, Olaolu Boboyi from Cardinal Stone Partners Limited. Thanks for coming. Thank you, Ambrose Omodio from Invest Data. Alaji, thank you very much for joining us on today's show. All right.
Thank you for having me.
All right, okay.
Thank you, sir.
All right, this brings us to the end of today's show, Analyst Hangout here at iBrandTV. The show returns same time next week. Same station, of course, iBrandTV. My name is Olayemi Akwande. Enjoy the rest of your day. Goodbye.